All right, Caleb, this is a 1-minute chart of NASDAQ's trading today. So at the start of the trading day at 9:30, the high and up into the lunch hour. So this is basically what your working hours are going to be. It's a little past it, but nonetheless, this is what you're going to be focused on each and every trading day. You don't care about what happened prior. You don't care about what happens after. Okay, so by 11 o'clock, worst case scenario, 11:30 New York local time in the morning, you're done. Okay, I want you to take a look at the price action here, study and observe what it is that you think you see in price action. And if it looks a little intimidating here like this, it's okay. It's normal for you to feel that way. But don't watch the rest of the video until you do this part. All right, here's the daily chart on NASDAQ. So I covered the fair value gap here in yesterday's review. And this shaded area here is yesterday's fair value gap that I mentioned during the markup. And you find that on the 15-minute time frame up here, upper left. That candlestick is Wednesday, August 14, 2024 at 3:45 p.m. That's what this little green shaded area is, okay? So this is the same chart I showed you yesterday, but during the live stream, you see this same area here. So it's drawing back up into that as a premium array. All right, got a little bit of confusion today. One of the students said their new day opening gap low didn't match mine. Well, it's because I don't have my prescription filled on my glasses. I mean, they're waiting on me, but I didn't go to pick them up yet. So I have to make sure I go get them tomorrow. New day opening gap low. This is accurate because it's the close of this candlestick here at Tuesday, September 3rd, 2024 at 4:59 p.m. That price right there, that closing price is here. And then the next candle that we're highlighting is the 6 p.m. Tuesday, September 3rd, 2024. The opening of that candle, which is this price here, that is the new day opening gap high for September 4th. But because I was creating this one first and then I copied it and drug it up to here, I failed to notice because my eyesight is not what it used to be. I failed to change that label to NDOG high September 4th, 2024. So that's probably why yours is not matching. You probably just looked at it real quick and said, well, yeah, it doesn't match up mathematically to mine. So now you understand. 15-minute time frame. That's that new day opening gap. Again, you can see that it's labeled incorrectly. That should be the high and that should be the low. And I mentioned that we were sitting around the August 13th, 2024 daily fair value gap consequent encroachment. The high of it is this level. The low of it is here. Midpoint is consequent encroachment. We're consolidating around in there. And I mentioned how we were likely to engage the liquidity below these lows here. And new day opening gap is here. And we'll look at the opening range gap in a little bit. Notice that fair value gap up here. You see that? This is what you should have on your chart. And admittedly, I was watching it today. I saw it, but I didn't make any mention of it. So unfortunately, that was a bad mentor thing today for me. So I failed to observe that. So I'm just going to chalk it up to not being able to see it well because all these candlesticks are starting to bleed together. So it takes a whole lot for me to zoom in with my focus and get my, clip my face as close as I can with my bifocals. And I'm playing like a Mr. Magoo. Okay. And it's hard to see sometimes. Hopefully I'll get it corrected tomorrow. But that range is a fair value gap. So we're going to highlight that with lines. And you can see that here. So that's that green fair value gap that I highlighted yesterday and just explained to you why it's going to appear here. And then you have the fair value gap here in the form of a SIBI. This is the high and this is the low of that. So what I just shaded in that little rectangle on the previous slide before we came to this chart and zoomed in, that's what that is here. Okay, so here's the sell side I was annotating today. Told you that would be likely swept. And the market rallied up, reached into new day opening gap for September 4th, 2024, reached into the SIBI low, SIBI high, and that gap that we were using yesterday and what I mentioned a week ago as a draw on liquidity to the downside. It referred back to it again here and then came back up and bumped the bottom of it there and worked its way back lower. So we're going to start stripping this thing down here on 1 minute chart. Sell side liquidity pool here, and this one also being at the August 13th, 2024 daily fair value gap consequent encroachment. Be mindful when you're doing your screenshots that you move your charts around so that way these little artifacts on TradingView don't mask it and hide it. So that's a little annoying for me. But we're going to go through step by step. You can see here, this is the first fair value gap between 931. You can see that the time is being hovered over top of, when you do your screenshots, Caleb, just put your cursor right below it, the candle you're trying to highlight, and then take your screenshot. That way the time and date axis will be highlighted down here. So that way you can see clearly what it is. And that is the first fair value gap after 931, but between 10 o'clock. So 10 o'clock in the morning to 931, the first fair value gap that forms, you want to make sure that you note that. Market drops down into that. I identified during the live stream today that noting this phenomenon with the price showing the bodies outside of that fair value gap and the volume imbalance, that's typical on a day post large range. So it's not something that's causing some concern that the algorithm is being changed or anything like that. It just means that this is a natural characteristic of that, or a day after holiday. Market rallies up, hits the new day opening gap low, touches it once more, then breaks down aggressively, hits the sell side. And I mentioned during the live stream that when we started trading up here and this candle started trading, I mentioned that I was watching the midpoint of that fair value gap. I want to watch, does it come back down in there and then drive up into the relative equal highs here. So extending that first fair value gap that formed between 931 and 10 o'clock, this becomes a reclaimed fair value gap. We swept through it, took stops, and then right back into utilizing it again. Targeting the relative equal highs up here. That's where your buy side is. Here, we have another buy side imbalance, sell side inefficiency. After hitting the buy side, we drop back down into it again once more to the very low tick of it here. That candlestick's high. And we started accumulating again. And I mentioned that I wanted to see it go higher. I said I wasn't ruling out any further upside. And as we saw on the live stream, I scrolled down to reveal that shaded area up here. And I mentioned that would be a likely draw. We could see if it trade up into that. And it did that very thing here. So we have a sell side imbalance, buy side inefficiency here when we're bullish. So that means that this is going to be a potential inversion fair value gap. We trade above it here, and that validates it. Trades down to the lower half, fails to hit the consequent encroachment, starts to rally. It's going to be good. It rallies higher. Immediate rebalance, candle high. We start to move higher here. Open, trade all the way back down to the previous candlestick. So it doesn't give it a fair value gap. It's an immediate rebalance. And then when you see that, usually will start to speed up its momentum and move to the liquidity or inefficiency it's aiming for. You see the institutional order flow entry drill leaving that gap open after the immediate rebalance. The market trades up, hits the low of that SIBI, and then drops back down into another fair value gap and order block. Extend that opening price in the future if you want to add that in your chart as well. But the fair value gap here, it drops down. Small little mohawk, just coloring outside the lines. That's normal. That can happen even on a day that's not after a big range day or a holiday. That's a normal artifact in price delivery. And the market rallies. Look at the bodies respecting the top of the fair value gap there. Both of them are green. And then setting up into and just above that fair value gap I mentioned on yesterday's live stream and in the recap. This inefficiency here, after it hits our targets, and it's the time of day. Look what time of day it is. 11 o'clock, 11:10. So we're probably close to a intermediate term retracement because the lunch macro will start 11:30. The market drops back down. Notice it does not support any rally higher. Hits the low of that green fair value gap that I mentioned last week as a draw for lower prices, and then we saw it hit yesterday. Now we're seeing it act as a premium array. Hits it perfectly there, rolls over. Bodies are doing what? Look at the bodies. They're respecting the consequent encroachment of that inefficiency after trading below it. So it's going to act as what? Inversion, fair value gap, and drops back up, down once more into the lower half, but fails to get to the consequent encroachment level and sells off aggressively. And let's zoom in here and take a little bit more time appreciating this. This up close candle is a bullish up close bearish order block. The mid level is the mean threshold, not consequent encroachment. So I want to have that level there. We rally up into but fall short of that mean threshold, which is good. That means that this is being validated as a strong bearish order block. So we can start seeing price reach for what? Sell side. That would be here if you want to annotate that. Inefficiency with volume imbalance. And then we have the new day opening gap for September 4th. So with that level, failing to trade there, we have the order block, opening price, that's the change in the state of delivery, reprices to it, and now we want to see it drop lower. Does it? Yes. And then it fails to get to the mid part of that inversion fair value gap. We have a smaller SIBI here, sell side imbalance, buy side inefficiency. And I'll remove that inversion fair value gap and highlight that a little bit more prominently so you can see them. Market trades up, beautiful delivery. That's all part of the same lower region of that inversion fair value gap that's over here. So when you're taking your annotations, if you have to do something like that, just to make sure you're getting the intricate details, it's really, really important that way when you're reviewing it on the weekend or looking at previous week's data like this, it just allows your subconscious to retain that information. And ultimately dropping from the inversion fair value gap down into new day opening gap here, and then consolidates. This move here is not what you're looking for, but it's important for you to start seeing these examples so you can anticipate that taking profits here is a good thing, because this is what usually we'll start to see unfold. And again, back to that plain Jane naked chart. And now with this showing the regular trading hours, that's going to highlight the difference between previous day's settlement price and where we started trading at 9:30. And with that on your chart now, everything shown here gives that naked, seemingly aimless price movement now suddenly has structure. We have a gap opening lower. So that means half of that gap, 70% of the time, before we get to 10 o'clock, it'll trade to that. First fair value gap inside of 9:31 to 10 o'clock, that's here. Accumulation and outside the lines that define that fair value gap is permissible because it's a morning session after a large range day. Rallies up, the 70% strike rate holds up again. Trades up to new day opening gap, creates relative equal highs, and it's trading to, look at the bodies. See the body there? It's respecting the upper quadrant of that opening range gap. So I'm highlighting in the gray area, that's your opening range gap. The difference between previous settlement price at 415 p.m. Eastern Time to 9:30 opening the following trading day. So you want to look at that with the regular trading hours, and you'll see that this range will be defined by as we have it here. Sell-side liquidity pool tagged consequent encroachment of the August 13, 2024 daily inefficiency rallies back into first fair value gap between 9:31 and 10 o'clock, forming a reclaimed bullish fair value gap, rallies, buy side and bell, sell side inefficiency, creating another bullish fair value gap. It's accumulating in here. Rallies, inversion fair value gap, off of the midpoint or consequent encroachment of the opening range gap. That's this big box here. Look at that. Perfect delivery right there. And then runs. Immediate rebalance at what? The upper quadrant level. And sends it running. Institutional order flow entry drill. Fair value gap. Accumulation. Reaccumulation. Sends us a gap going into our targets. If it trades below that, as we see here, this makes it a valid candidate for inversion fair value gap, which we see all the details we just outlined and back down into the daily, not daily, but the new day opening gap for today, September 4th, 2024. But hovering around that upper quadrant level of the opening range gap. See that? So that's it for today. Study it. Make sure you go through each individual component, spend a little bit of time with it, Caleb, and then write down any observations you had, and we'll talk about it this weekend.